Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shail Bhatnagar, and this is Market Today. Well, as of yesterday, we've actually witnessed a spectacular trading session, and that's after recent many days of consolidation. We did see the stock markets making new record high levels, the Sensex climbing the milestone 78,000, and for the Nifty, we have a new record high of 23,751, all thanks to the Bank Nifty that was up 900 points in trade as well yesterday and is now well above the 52,000 mark as well. 52,606 as the new record closing high for the index as well. For the June series F&O, we've actually seen the Nifty up by about 1,200 points with two trading sessions still remaining to go. Now, of course, apart from the banking names, the big question now comes as far as the Nifty is concerned as to whether 24,000 is in sight, and will that happen before the end of the June F&O expiry series? Good morning to viewers and good morning, Shail.
Good morning, ladies and gentlemen. We are on this lovely Wednesday morning. Sakshi's just used the right English word, spectacular. That's what's happened yesterday. And Sakshi, for a change, what we'll do is we'll start with the Bank Nifty and then we'll go on to HDFC Bank. Let's get, for a change, the Bank Nifty chart on the screen, ladies and gentlemen. As Sakshi mentioned earlier, it's been a spectacular rally. We have 52,606 on the chart. Needless to say, it's a record high. Yesterday's tally was a 902 point uptick. Now, ladies and gentlemen, let's look at the daily chart of the Nifty Bank. Yes, there it is. As you can see, there is a very sharp rally that's come in, and today is the final day of the June F&O expiry. The index itself has added 4,100 points from May 29th, which was the previous F&O expiry, which is a gain of about 8.5%. If you look at the June 4th low, the very huge red bar that we have seen, that was from voting day, that has been a rally of about 6,500 points over the last 18 trading sessions. That totals, ladies and gentlemen, to a 14% uptick. When such indices move with such phenomenal rapidity, the first thing to do is not to short this market. If you disagree with the way the price is moving, it's best to remain a fence sitter rather than go on and make a loss in the options market. Let's look at now HDFC Bank. This is the heaviest weighted stock in the Bank Nifty. About a third of Bank Nifty is because of HDFC Bank, and remember, the stock is up 12% so far in the June expiry. This is a stock that has seen very bad days over the last 4 years and has finally broken out. HDFC Bank's delivery statistics over the NSE and the BSE yesterday was 3,500 crores, and if you look at the 5-day delivery number, that's about 13,000 crore rupees as far as markets are concerned for HDFC Bank. I'll also request the PCR to fire the ICICI Bank chart, and then you'll see a very strong breakout that has also come into this counter. ICICI Bank a record high, HDFC Bank about 2.5% away from a record high. I believe those numbers are coming in very quickly, and I'd also like you to see the SBI chart. So the participation is actually from private sector banks rather than the largest public sector bank. We'll go into this in a little detail. So we are on the monthly expiry of Bank Nifty. I expect it to be really quiet, but this is the starting of a new trend, a new bull market. The least you can do is buy a simple Bank Nifty ETF, which we'll be discussing later in the show. Let's get into more details as far as the markets are concerned. Well, what really has happened yesterday is a blowout. The Nifty is broken out of a very long consolidative phase, 23,721, 183 points higher, and of course it's the private banks that have contributed, HDFC, ICICI. If you look at the options data for Nifty, there is a very strong bout of short covering by Nifty bears that's happening on 23,400, 23,300, 23,200, 23,500. It essentially means those places are getting vacated because now market men don't expect those levels to come back. So that is prompting the Nifty to rise, as also 23,800, 23,900, and of course 2400 is also getting vacated by Nifty bears, which essentially means we are headed higher. In this kind of an environment, you might see the Nifty pause for 1 or 2 days, but this is a rally that has taken place and it is driven by private sector banks. It will go higher and higher. What's really interesting as far as stock markets on the cash stocks part is concerned, Spectrum auction day 1, 11,000 crores have been collected by the government. Stocks in focus include Bharti Airtel, Reliance Industries and Vodafone Idea. There is the AGM circuit happening. We have Infosys, ACC, Ambuja and Tata Chemicals having their AGMs in the market today. And of course, keep an eye out on Mazgaon Dock. The company has been given a Navratna status by the government of India. It's the 18th Navratna on the corporate space, and this will give a lot of flexibility to the management to take decisions independently. Block deals continue. MapMy India today 115 crores, 0.9% stake to be sold by the promoter, and Sanghi Industries. This is a cement player in which the promoters Ambuja Cement and another individual own 78.52% stake. They are trimming down 3.52% stake via a block deal. Back to you, Sakshi. What's the update coming in Wall Street and what are our foreign funds doing?
Absolutely, Shail. So for the US markets overnight, we did see that the S&P 500 closed about 0.4% higher. The Dow Jones declined, however, by about 0.7% in trade, and the Nasdaq advanced by 1.2%. That after days of sell-off in the tech stocks, there was finally an uptick that came in, and after of course, we did see a recovery back in the Nvidia shares as well that pulled up the entire US market space too, especially the Nasdaq up by about 1.2%. So that was a bit positive. On the other hand, benchmarks in Asia Pacific region were trading higher in the initial trade, but there was some kind of a lack of direction that they were trying to find. Nikkei was up by about 0.5% in trade, and we did see the S&P ASX down by about 0.5%. The Kospi up by 0.1% and the Hang Seng up by about 0.2% as well. So mixed trading action being seen on that front. As far as the GIFT Nifty is indicating, a muted start for the Indian markets. A downtick of about 30 odd points is what we can what we can see at 23,701 odd levels. But as far as the foreign flows are concerned, overseas investors turn net buyers after 2 days of selling. They mopped up stocks worth about 1179 odd crore rupees. And when we actually see the domestic institutional investors, they offloaded worth about 149.5 odd crore rupees worth of stocks as of yesterday's trade. Of course, a whole host of stocks that are on the radar today. Like you pointed out, CE Infosystems, that is something that I'm watching out for. As per the reports that we are getting, Rakesh Kumar Verma, the promoter of CE Infosystems, now plans to sell about 0.9% of the company's equity through a block deal valued at 114.6 odd crores. Sanghi Industries, here the promoter Ambuja Cements, and Ravi Sanghi is scheduled to for an offer for sale to divest about 3.5% of the stake in Sanghi Industries, setting the floor price at 90 rupees per share for June 26 and June 27. So we'll keep an eye out on that. Yes Bank is in focus because the bank has disclosed its plan to raise funds through debt securities on August 23rd, with its share price closing at around 24 on June 25. Apart from this, IT space, Coforge is going to be in focus. The Competition Commission of India has approved the company's acquisition of a 54% majority stake in Signity Technologies following Coforge's board approval that we had seen in May. From the cement pack, I'm also looking at Ultratech Cement. It has revised its offer to acquire a 25% stake in the UAE-based RAKWCT, which is down from the initial about 31.6%. Also from the shipbuilder space, I'm keeping an eye out on Mazagon Dock Shipbuilders. The company has announced it's achieved the Navratna status now from the Department of Public Enterprises, becoming India's 18th PSU to receive this recognition as well. And of course, there'll be a new debut today of DEE Development Engineers, as the shares will debut today after a highly subscribed IPO of 99.5 odd times. Remember, as we were discussing the telecom spectrum auction, there were bids that were placed for the approximately about 11,000 odd crore rupees on the first day of the spectrum auction, covering about 5 rounds, but a muted trend or a muted takeoff on that note, Shail.
Ladies and gentlemen, we'll now welcome Mr. Gaurang Shah. He's the Senior Vice President for Geojit Financial Services. He'll be joining us shortly, and a little later in the day, Mitesh Panchal, who will be looking after the technical part of the markets, will also be with us. Sakshi, my apologies, you couldn't hear the early part of my conversation on the Nifty Bank and Nifty. I had just used a word, spectacular, which you did, and mentioned that this is absolutely the right word to explain yesterday's rally. Again, I'll request the PCR to fire Nifty Bank, and I'd just like to spend a little more time on HDFC Bank. Ladies and gentlemen, while HDFC Bank has been the top performer in the month of June for Nifty and Nifty Bank, it's added 12% over the last 22 trading sessions. But I may point out that this is still way off from what is in the pipeline as far as HDFC Bank is concerned. The PCR will draw the longest possible chart of HDFC Bank, and you will realize that it's actually an underperformer on the Nifty over the last 1 year. While the Nifty has gone up 26% over the last 12 months or so, HDFC Bank has just appreciated 3%. So there's a lot of catch up to do as far as HDFC Bank is concerned, and this is perhaps the only time that you will get to add this particular counter in your portfolio if you don't have it. Over the last 1 year, Nifty Bank has appreciated 19% compared with just the 3 percentage point uptick on HDFC Bank. When the big guns move, this is what you do. You keep an eye out on it, and you just keep on adding it at lower levels. Gaurang is with us. Good morning to you, Gaurang. शुभ प्रभात, स्वागत आपका इस बुधवार को. बहुत बढ़िया दिन आपसे वार्तालाप हो रही है. निफ्टी में ज़बरदस्त मोमेंटम, बैंक निफ्टी में उससे ज़्यादा मोमेंटम, और HDFC बैंक में सबसे ज़्यादा मोमेंटम. अब आप बताइए करना क्या है.
बहुत बहुत धन्यवाद शैल जी, आपको साक्षी को और सभी दर्शकों को सादर प्रणाम और शुभ प्रभात हमारे तरफ से. यानी कि yes, good to see all of you all, and what a beautiful morning it is, isn't it, Shail? The way the markets reacted yesterday, especially led with the bank Nifty and some of the banking stocks, as you were mentioning. HDFC Bank, last week, if you remember, Wednesday, I was praying to Lord Almighty. You had asked me this question on banking stocks, especially if I recollect right, HDFC Bank. And कौन कहता है कि भगवान सुनता नहीं है, देर है लेकिन अंधेर नहीं है. So, I mean, the performance was stellar, and that led to the frontline indices also make a new all-time high along with Bank Nifty. And the greatest of all time, HDFC Bank finally showed some strength. वो कहते हैं ना शैल, जब हाथी नहीं चलता तो नहीं चलता, लेकिन जब चलता है तो 100 हाथियों की रफ्तार से चलता है. So that's the kind of speed. Now I would want Reliance to catch up, Shell. I think if that is the case, then 24,000 should not be far away on the Nifty spot. This is my wishful thinking, of course. But not to forget, we are in the F&O expiry week. Tomorrow is the F&O expiry, monthly expiry. And we may possibly witness a little bit of choppiness, a little bit of more volatility. And it would be interesting to see how the rollovers take place. Share.
Gaurang, great to have you with us. In fact, this is what I was about to ask you कि अब की बार 24,000 कब तक होने वाला है. फिर अब जब finally HDFC Bank ने अब दौड़ लगानी शुरू कर दी है, after a long haul, after a lot of testing of patience, it has finally moved. And do you think now there is no stopping this momentum, and hopefully so?
So, Sakshi, morning to you as well. Good to see you this morning. So, given the FNO expiry, one should not take anything for granted. In fact,
Yeah.
for markets, actually, you should not take anything for granted. I was pleasantly surprised. Let me put it this way: the move that we saw yesterday, it has really reinforced our confidence. In fact, on Monday morning, every Monday morning, Sakshi, we give out a market outlook for the week. This is put up on YouTube by our company's uh, handle called Geojit Spotlight. So on Monday, a broad range for the Nifty spot, what we had given out was 23,300, 23,400 on the lower side, and 23,700 and 24,000 on the higher side. So the first higher level was seen yesterday. Second higher level, I think, if not this week, then next week we should possibly try to achieve that peak 24,000. And on the lower side, Sakshi, I think 23,350 or 23,300 looks to be a very strong, buying zone. I would put it that way. I would not call it a support. I would call it a strong buying zone, wherein we've been there this week, last week, couple of times, and even before that, a couple of times, and we managed to scale up. So we are in a pleasant spot, sweet spot. But my only regret is, the rain gods has not showered their blessings as it would have in the earlier season. So monsoon catch-up would possibly add a sweetener to this nice cherry cake that we are looking at.
Okay. Just a bit of a update on the monsoon. It seems to have stalled over the last 1 week over Maharashtra and over the last 10 days across India. That's a point of worry, but just as they say, all worries have an expiry date. I'm sure the clouds are also planning a nice party for India. We'll take a look on that. Gaurang, this is the time for T20, and yesterday's innings by HDFC Bank were no less than what Rohit Sharma did to the Australian cricket team. I'm just wondering about Kotak Bank. All of us know that there was nothing wrong on Kotak and HDFC Bank's balance sheet over the last 4 or 5 years, but it was those times in the market when such things happen and you just need to ignore them. What's your call on Kotak? Do you see it sort of catching the wind behind its sails and participating in this rally?
I'm more optimistic rather than pessimistic, Shail. You've known me for quite some time now. And, when people put down all their hopes, my hopes start building up. And many a times when, जब काफी सारे मत एक तरफ हो जाते हैं, तो मैं विपक्ष में खड़ा होना पसंद करता हूँ. And that's been my way of approach towards the equity market. And thank God it has been very pleasantly paying up for whatever approaches I've had on Kotak Mahindra Bank. You remember, Shell, there was a time when they had a kind of a dispute between them and Reserve Bank of India, and the matter landed up in the Bombay High Court. And if I'm not mistaken, finally this matter got settled out of court. At that point of time, I think Kotak Mahindra Bank slipped towards 1200 rupees. So I was on one of the business news channel, and I said, look, at 1200, I think it's a stock which you cannot go wrong by investing it from a long-term point of view. Then we had the unpleasant scenario by repeated attempts by Reserve Bank of India in terms of upgrading and securing their IT environment or back-end infrastructure. They did not do it, and they got a whack for that. Possibly it gets sorted out very soon. 2300, I believe, Shell would be the target for Kotak Mahindra Bank, and it is rather unfortunate. A bank run by Uday Kotak, Mr. Uday Kotak, has to face a whip from the Reserve Bank of India because of certain systems related issue. I think it's very, very sad. But nevertheless, I think everybody is at their own comfort zone in terms of making some mistakes or the other. Let's hope they sort out this issue ASAP so that they can onboard new clients.
Right. Now, Gaurang, the other thing that I wanted to understand from you is on the telecom space as well. Yesterday, we saw the telecom auction take place, muted demand or a muted takeoff as of now. We have been discussing Bharti Airtel quite a number of times, even before. We've also discussed Vodafone Indus Towers as well. Where do you think the entire sector is poised to head now that there is softer demand for this time, and there is no too much fight or a competition between, probably snatching away spectrums from each other at this point in time? A situation is far different from it was earlier.
Well, Sakshi, you're absolutely bang on. I think it's good that policy changes has been put in place by the respective authorities, and there is no kill each other for spectrum. I have no clarity in terms of who all were bidding in this spectrum, but I would have been pleasantly surprised just in case if Vodafone Idea has bid for any kind of 5G spectrum. In this spectrum, overall the view in the market was that it is going to be lackluster. It is not going to be that's going to be exciting, and the amount that was being spoken about yesterday in the market grapevine was somewhere close to about 20,000 crores. I'm not sure how much it has garnered or what is the final figure. But telecom has been and will always remain. And I have also been very, very vocal in terms of my personal opinion in terms of the duopoly that we have in our country. There needs to be two or three more players, and Vodafone Idea needs to pull up their socks and straighten up their debt on the balance sheet and become more operational efficient. Uh, so my sense is that this sector, and I think very soon you are going to see anywhere between 15 to 20% hike in terms of tariffs.
Yeah.
That's going to be very, very positive.
Absolutely. There are two tariff hikes in the pipeline while the date and time is uncertain. What is certain is that you will be paying higher bills, and that is beneficial for Vodafone Idea to survive as a corporate entity, and it's going to be very, very good for Bharti Airtel as also Reliance Jio, Reliance Industries once these tariff hikes are in the pipeline. Gaurang, pardon my inquisitiveness on the banking sector. I'd like to take a view from you on State Bank of India. The PCR will fire a chart that I've submitted for their perusal. Now, what has happened is that we have the reverse cycle taking place. Private sector banks are again coming back under focus, but possibly it takes the spotlight away from PSU banks that have been market darlings over the last 3 years or so. Now, do you see the rally in the PSU banking sector quietening down, especially against this backdrop of the rising drumbeat of farm loans being waived off by state governments?
I don't think so, Shail. I think these are just small pauses in terms of the overall long-term positive approach that we have towards the entire banking universe, strong NBFCs, private sector banks, and public sector banks. My own calculation is just relying on the inputs that we've had and the future earnings. State Bank of India could be heading towards 1,000 levels. It will take time. It is not going to be anything that's going to be happening immediately. And our view is always on the fundamental side, Shell. So one needs to have a very clear-cut understanding that these are all long-term targets and approximate values that we see on fallback of earnings that is going to improve. Farm loan, we were, you know, it's rather sad, when and that's the big problem, Shell, with the politics in our country. Whenever you have a not so very decisive government with majority in the center, and you have some coalition partners, those partners tend to do something which is a little bit otherwise than what your thinking and philosophy is. So I think it's just a small spoke in the wheel. I don't think it can impact the public sector banks' earnings to a great extent. And responsibility should be taken by the state government and not put all the burden on the public sector banks, because we have worked very hard to improve the balance sheet of public sector banks. Shall let's face it. I don't think we can again let it go down.
Okay. Just a minute to go before the markets hit pre-open. In the run-up to the budget, Gaurang, have you added any stocks to your list which you are keeping an eye out on, maybe adding?
Sakshi, I don't do that honestly. Budgets come and go every year. But the Honorable Finance Minister will do and will do as per her own wisdom and fine sense of judgment. I am extremely adverse towards taking any kind of short-term call. I'll just give you an example. What happened to the fertilizer stock? What happened to the gaming stock when the GST Council met? Everybody built up thinking that, I mean, honestly, everybody thought that they are the super executive of the GST Council and that everything will go through and their stock that they've bought in anticipation will go up 20%. Nothing happened, Sakshi. So I think it is not sensible or it is not wisdom oriented to take those calls. Budgets will come and go. Take a long term call. If you ask me themes that you should look at, I would again repeat some of the things that I have mentioned earlier also, Shakshi, that defense, power, infrastructure, railways, banking, autos, cement, a little bit of contra play in terms of IT. I think these are the sectors that you should look at from a long-term point of view, not from a budget-related perspective. And I'm never in that camp of taking that short-term call.
All right, pre-open is upon us, ladies and gentlemen. For a change, a red tick. We'll completely ignore this. This is not what is most likely to happen. Nevertheless, let's look at prices of the index heavyweights. HDFC Bank is starting 20 rupees lower, 1691. This is not going to happen. Prices will improve for the better. There's a 2 percentage point cut on Reliance Industries, 2850. This will also improve further. And Infosys, 42 rupees lower, 1505. All these prices will improve for the better. What's in the green? It's ITC of 0.4% higher, 425. What's in the green? There is Bajaj Finserv in the green, 0.6% higher. We'll let Nifty settle down on its own. And at this point of time, let's look at the top gainers on the NSE 500. Well, with Gaurang with us, how can defense stay behind? We'll start with Mazgaon Dock, 4100 for you, 3% higher. The company has become a Navratna in the universe of central public sector enterprises. This helps in taking quicker and larger decisions, and this is for the long term good for the company. Okay. What else is moving? It's Endurance Technologies, 2.8% higher, 2740. There's PNB Housing, 2% higher, 798. There is, for a change, a smart move coming on Tata Technologies, 6.4% higher, 1065. And how can I forget Cummins India, 2.2% higher at about 4100 rupees. This is how markets are structured. They're still very, how should I say, flaky and edgy. We'll just let them settle down. I'll just mark the highest in the gainers list. It's Coforge in F&O, 5424, 1.3% higher. This news driven as far as markets are concerned. Nothing much happening. In the most active list on the F&O, we have, nothing much here. I mean, we'll just let these prices settle down. Apart from Apollo Tyres, I don't see anything great happening in the F&O space either. Nifty is improving now, just 99 points lower, 23,623. I am sure this will improve over the next 1 or 2 minutes. Mitesh Panchal joins us to look after the technical and derivative parts of the markets today. Good morning to you, Mitesh. Firstly, your view on HDFC Bank. 3 days ago, you were with us and we discussed these private sector banks in much detail. What now?
Good morning, Shailji. Good morning, Sakshi. Good morning to the panelists and to the viewers. yes, private banks are on the hook, and we are of the view that the marathon run will continue. Last time we have also said technically that whatever correction comes in, one should be in the private banks, and we have quoted three banks: HDFC, Kotak, and ICICI Bank. And yesterday we have seen a good amount of contribution from them. I think it's all about the trend extension. So the trend will continue. Any weakness in these private banks should be bought into. And we have also discussed at length about the PSU banks, but unfortunately, that momentum is not picking up. But we are of the view that sooner than later, the PSU bank or the PSU saga will come back in the banking stocks. So, in the preferential picks, SBI, PNB, Canara Bank, and Bank of Baroda, all the four constituents which are the part of F&O segment, we are looking a very strong and a sharp run up in the PSU bank sooner than later. So I think seven banks bunch for a trading perspective is what we are looking at. Three from the private bank, four from the PSU banks. So yes, now we are of the view that sooner or later, the kind of action which we have witnessed in private bank will get replicated into PSU banks. So all our eyes are now on the PSU banks, Shailji.
Okay, got that. Warm welcome to you, Mitesh, and good to have you. And of course, all the banking space is something that we'll continue to keep an eye out on as well. Within the private sector banks, where would you keep your top preference now? You did say that earlier you were saying HDFC, Axis, and Kotak would be your preferred picks. Would you still go with them? Are there any inclusions other than that within the private sector banks that would now take the front row?
Not really right now, Sakshi. As you know, we follow the technical, so we'll have to speak what the charts are or the methods and system are telling us. So no subjective view here. So what the charts methods are telling us is that these three banks, that is Kotak Mahindra Bank, ICICI Bank, and HDFC Bank, are attracting buying interest at all the lower levels. And technically also they are poised for a very strong upside. So no new names added. As and when the system signals about the new names, we'll definitely share with you. But right now, we are only focusing on these three banks.
How about financials, Mitesh? Anything within the NBFC space that looks positive? Yesterday, again, we did see some of the stocks moving in positive direction.
Yes, NBFC, the extension of the trend has yet not been confirmed, but I think Canfin Home is one company which we are looking at. And I think the trend extension will take place in Canfin Home going forward. So the stock is looking attractive at the current level. Going forward, probably the stock will eye at 950 to 960 levels. Stock is trading at around 897, 898 levels. So we think that technically the first breakout within this space will definitely come into Canfin Home. So that is the one stock which we are looking at.
Okay. Let's get Gaurang into this conversation on NBFCs. This is a very important point that Sakshi raises. Meanwhile, the Nifty is settled. It's completely flattened out now, just 5 points lower. In a space of 1 minute, it will turn into green. NBFCs, Gaurang, I'm requesting the PCI to fire the chart of Shriram Finance. This is Nifty's top gainer in the month of June, up 30%. Gaurang, what's happened? There seems to be a regulatory move by RBI that helped the entire NBFC sector rise dramatically over the last 10, 12, 15 trading sessions. Look at LIC Housing Finance, Chola Finance, Canfin Homes, Shriram in particular. What's buzzing here? And in terms of valuations, is there still value to be had?
But your audio is very garbled. I can't hear you very clearly, but I am assuming that you are asking me a question regarding the NBFCs, some of the diversified NBFCs and housing finance companies, and the way they have rallied. So, when we were discussing about this private sector bank and public sector banks, I had also referred to NBFCs. I will also want to make add one point over here is that don't forget to look at small microfinance companies or small payment banks likes of Ujjivan, Equitas, AU Small Finance, Credit Access, Grameen. Shell, one has to just look at and put things in perspective is that if we are going to grow at a very decent pace and we are likely towards becoming one of the largest manufacturing hubs in the Southeast Asia Pacific region, or even globally, for example, for automobile sector, credit demand is not going to go down. In fact, credit demand is going to go up, not only restricted to banks, public, private, but also towards NBFCs, small payment banks, and microfinance companies. Uh, all these names that I've spoken about remain extremely positive. And for housing finance company Shell, I think if we are going to see rate cuts coming through possibly by this year end or early 2025, then that will augur extremely well for across the board financiers as well as for housing finance companies. And for housing finance companies, we have one more positive to add is the recovery and the kind of sales numbers that we hear from the developers for the real estate sector. Their projects get sold off within 2 3 days, and the price tag is not small. Shell, it is quite big. So all these augurs extremely well. Now, because some of them have rallied, there could be a little bit of 1 or 2 days of profit booking. Not denying that, but the fundamentals remain extremely strong for private, public, NBFCs, housing finance companies, and microfinance companies.
Okay, got that. The other segment that I wanted to discuss with you, Mitesh, is the textile space. The way the momentum has built up in this entire space over the last 1 week, 10 days odd. We now have some news coming in from the textile minister, who's indicated that they're looking at the extension of the PLI scheme of 10,000 odd crore rupees for the garment sector. Could this be in the positive zone? Should this be a sector that all the traders looking at momentum play be at least looking at least?
That in such sector, the biggest problem is when to exit, as we have discussed in case of sugar and fertilizer. So if you don't have a strict stop loss discipline, then please don't get into this counter. Technically, two stocks are looking very attractive at this level. First is Ambika Cotton Mill. Now the stock has started trading above 1600 levels. So we are of the view that sooner than later, Ambika Cotton Mill will enter into a new trading range and probably will be eyeing at 1800, 1900 levels. So yes, currently one can technically look at Ambika Cotton Mill. Second stock which looks promising technically from this space is Vardhman Textile, VTL, Vardhman Textile Limited. So Vardhman Textile is also looking very promising from the current level, and we are of the view that sooner than later stock will enter into a new trading range. Since so many days, as you have pointed out, stock is attracting kind of a buying interest, and above 460 stock has done a strong stock has incurred a strong breakout on the weekly and the monthly chart. So we are of the view that now the stock is eyeing at 520 to 530 levels. So technically from this space, we are looking at two stocks. First is Ambika Cotton Mill. Second is Vardhman Textile. Again, I repeat same disclaimer that if you don't have a strict stop loss discipline, then don't get into the cyclical names because they have a very sharp up move and a very sharp down move. And for a very long period of time, these kind of stocks move into a very large consolidation phase. So please bear into this mind and then only get into these kind of counters.
Okay, thanks to Mitesh, a lot of memories come back from the cotton space. I think after maybe 5-6 years, I am hearing Ambika Cotton again, as also Vardhman Textiles. We'll keep an eye out on this one. And Sakshi, remind me to tell you a very interesting story about Ambika Cotton when we meet. With that background in mind, Mitesh, your view on Mazgaon Dock, top gainer, 4% higher as far as defense is concerned today. Yesterday was the day for Garden Reach Shipbuilders, and we'd just like to take your view on Mazgaon, news driven. It's the 18th Navratna that we have in the central public sector enterprises list.
Absolutely. Shailji, this is the space where I think one should not apply the mind in terms of technical and fundamental. Just go buy it and do one thing, keep your trailing stop loss up. Because there are certain stocks in the lifetime where at whatever point you sell, you will regret. I think Mazda Dock and Garden Shipyard belongs to that category. So we are of the view that one should buy at any given point of time. The only thing is that you should trail the stop loss, and believe me, every time in such kind of market, these kind of stocks will always surprise you. I mean, if you look at after 15 days, the stock will trade at 4,800. If you look at after 3 months, the stock will trade at 5,200, 5,500. So they have a tendency to surprise you. No one knows what is going on. No one knows who are the buyers, and how such buying is taking place. But the fact of the matter is this, that the trend is intact, and please be with the trend, don't go against it. And to be with the trend and get maximum out of a given trend, the simple and the most underrated strategy is a trailing stop loss. So if allowed to go long at any given point of time, maintain a strict stop loss.
Sakshi, it's 20 minutes that we've had Gaurang with us. You haven't spoken about Cochin Shipyard.
Yes, I was also thinking the same, Shail, that after
So-
Navratna status of Mazicon, it's now Cochin's turn. It's not going to be left behind too far.
Yes, and this is a running commentary between us two in business today and Gaurang on the other side to discuss Cochin Shipyard. We have a whole novel to be written on this one, on how this stock was picked up, and on whatever price points that Gaurang put a finger on, the stock obliged very gracefully and has gone up beyond that. We are now in the opening part of the market, ladies and gentlemen. It's a flat open on the Nifty, 23,727, and it's more or less expected. We are on T-1 as far as Nifty is concerned. Tomorrow is the end of what has been a fabulously volatile and enormously rewarding FNO expiry. The Bank Nifty on its monthly expiry today flat 20 points higher, the IT index 78 points higher, and a 9 rupee uptick on the Nifty 500. Very, very quickly we'll get into the heavyweight section. Let's look at what HDFC Bank is doing. Remember, it was the star of yesterday. 1701, 9 rupees lower. This is just breathing after a very sharp rally, so that's not a problem. 14 rupees lower on Reliance Industries, 28.95. And let's look at Infosys, 2 rupees lower, 15.39. Three index heavyweights, three super index heavyweights are in the red. So Nifty will obviously and automatically be in the red. Let's look at the top gainers. I'm very keen to look at ICICI Bank. This is a blowout again, 1205, 0.7% higher, 8 rupees in the uptick, and this is obviously an all-time high for ICICI Bank, as also Axis Bank. 1272 on Axis Bank, flat at the moment, but the two corporate sector banks are just clicking it away. Mazgaon Dock 5% higher, record high 41.80. Very quickly we'll get into the other parts of the market. Vedant 3.1% lower, 439. There is some news in the market that the promoter could be selling a minor stake, but that's not a problem. Just a knee-jerk reaction coming in on Vedant. Garden Reach Shipbuilders, yesterday's blowout stock, 3.5% higher, 2010 in front of you. That's moving. Cochin Shipyard is 0.5% higher, 2203. A mild red tick on Hindustan Aeronautics. MapMy India, this is the new block deal guy, now 3.5% lower, 2338. What are the top gainers in NSE 500? There is PNB Housing, 2.6% higher, 802. Jupiter Wagons, no stopping this one, 676, 3% higher. Let's also look at the FNO space, and then I'm coming to Mitesh on ICICI Bank. FNO Mannapuram Finance, 3% higher, 199. Piramal Enterprises taking it away, 2.2% higher, 900. Ultratech Cement changes a digit, now 11,000. Coming to you, Mitesh, your first view on ICICI Bank.
Very strong opening, undoubtedly. And I think let us look at the first 15-minute candle. If it's maintained its momentum, then yes, it's a buy for the day, and probably might be the stock of the day from the banking space. Around 1210, as you mentioned, at an all-time high. So I think with a stop of 1180, one should go long, if provided that if the first 15 minutes of low has not been broken. Then at 16th minute, that is on 931, you can go long in ICICI Bank with a stop of 1180 for intraday potential target of 1240 and 1250.
Okay, got that. Well, there is the block deal that has taken place as far as CE Infosystems is concerned. About 6.1 lakh shares or 1.1% equity has exchanged hands. This is worth 142.6 crore rupees worth of an equity at 2,332 per share right now. A 3% downtick as a reaction to this one right now. Mitesh, CE Infosystems has been in the thick of trade of late, and now this block deal that has come in, will this be under pressure for some time, or should this dip be bought?
No, I think the stock has run up quite well, and Sakshi, we are not comfortable with the volume. Even if you look at the derivatives volume, majority of the participation has come from the intraday participants. So I think one should book profit at this current level, even if the stock goes up, no problem. Because the cause of the concern is that the chart patterns are weak. On the prima facie, on the pricing side, it looks good, but when you couple it with volume, it is not that strong, which advocate the fact that one should continue going long in the stock. So definitely would like to book the profit at the current level.
Okay, even Vedanta has seen an equity exchange of about 3.3%. The stock is reacting lower by about 4.4% on this equity exchange. Let's get Gaurang into the conversation to really understand. In the last 1 week, 10 days odd, we've seen a slew of block deals, promoter exit in large quantities happening across the board, various companies. What does this indicate? How should an average retail investor really read into it, even though the markets are buoyant and they're, they're able to absorb the liquidity that is being created pretty sharply. But does this have a message for the retail investors at large?
According to me, zero message, Sakshi. And I'll tell you the reason why. Yesterday, Happiest Mind sold off, the promoter. Before that, we had multiple deals. We had Interglobe Aviation also, some promoter or partner promoter selling off. Before that, I'll just give you one simple example. I'm sure you would remember. You remember the parent of Whirlpool sold off about 3-4 weeks back.
Yes.
Using their own wisdom. Similar discussion was there that day, that why is the parent selling off? What are they going to do? Is it that the stock has seen the sky limit and now it's going to go down? That is the reason, etc., etc. But to the surprise, Whirlpool is much above those levels from where the parent exited.
Yes.
I mean, don't read too much into all this. These are just, unnecessary noise pollution in the stock market, which tends to disturb the weak investors, and they end up taking a decision which they repent going forward into the future. So, I mean, nothing changes, Sakshi. According to me, the company functions as better as it would have otherwise. Promoters or any large investors sell their stake or investments due to various reasons. That doesn't mean that the company's gates are going to be locked and there is going to be a Godrej ka Nautal that is going to be hanging outside the entry gate. So please don't be under this kind of misunderstanding.
Okay, we'll take that advice on block deals. And while we are talking about block deals, there's another one that's happened this time on Sharda Motors, Sakshi. We normally don't track this one, but 8.8% higher, 2175. It's a small block deal, but a block deal nevertheless. One of those top gainers that's there on the screen. What else is buzzing? No surprise here. Amara Raja Batteries, 7% higher, 1758. A decent move coming into Piramal Enterprises as well, 3.5% higher, 912. And when you see the sharpness that is coming into the FNO space, that is also good. I think it's Mannapuram Finance which is amongst the top gainers. No, it's Piramal Enterprises and Mannapuram Finance. Your pick, Mitesh, what looks good or better between PEL and Mannapuram Finance? Where do you think these stocks are headed?
Undoubtedly, Shailji, PEL. The reason for that is that it's a very long time for the stock to cross 900 if you look at the chart. And I think now this time the stock is heading for a 4-digit. So that is a 1000 kind of a level. So undoubtedly within this too, PEL looks very promising. And with a stop of 870, one should go long into the stock. Today, intraday target will probably be around 930, 940. So yes, Piramal Enterprise is looking very promising.
Fair point. This is, as I had said, showing a large amount of block deals that are coming in, 54 crores. Yes, this is what's happened on PEL at the moment. Let's focus on the banks and see what they are doing at this point of time. Quiet as quiet can be, apart from ICICI Bank, which is now gathering fresh momentum, 14 rupees higher at 12.12. We are also waiting for 9:31 because that is the time Mitesh will make up his mind what to do as far as banking stocks are concerned. Most active list led by Vedant, a block deal worth 3,000 crore rupees on this one. Mild and muted trade on HDFC Bank. Quiet move on Axis Bank, all quiet. Okay, now it's Idea Cellular, Vodafone Idea, which is amongst the most active counters so far. 126 crores traded, 8 crore shares traded, 1.34% higher, 1743. Remember, this is the spectrum auction that's happening in New Delhi, and there are only 3 bidders: Voda, Reliance Industries and Bharti Airtel. It's supposed to be muted, which basically means that raw material costs for spectrum for telecom service providers will be manageable. So that's possibly one reason why you see the sharp uptick. All-time highs: ICICI Bank, Axis Bank, Indian Hotels in F&O, and within the larger pack, Raymond, 1.2% higher, 28.14. Coming to you, Gaurang, the price ticket on Raymond is slightly higher for retail investors, but there is no stopping this stock. What's happening on Raymond?
I think, as we all know, this traditional textile manufacturing companies, they have a lot of land parcel on their balance sheet because of the mills that used to run once upon a time. And those land parcels have become a treasure hunt for these companies in terms of redevelopment into real estate. You are also quite aware, Shail, that Raymond has a decent land parcel available in parts of Mumbai and Thane. Since we are discussing the stock, I think it will be prudent on my part to give a disclosure that we have a fundamental buy call on Raymond's. Surprising, there is also a news of that in case if the wisdom prevails, then they are going to hive off the company and list it as a separate entity. That's the kind of, this is the market gossip. This is not confirmed by either parties. That's the caveat. So that could also unlock value. But the huge potential, Shell, in terms of, Raymond's is one of them. The other company, this is not a recommendation, just a reference since we are discussing the stock, the sector, is Centuries Textiles. That company has also seen a decent attraction towards land parcels.
On the entire textile space that seems to be buzzing. Gokuldas Exports is another one that's ticking higher, about 4% up move can be seen on this one again. And of course, the names that even Mitesh has taken, Ambika Cotton and Vardhman Textiles, we'll continue to keep an eye out on that as well. So the entire space seems to be in some action today. Apart from this, I wanted to also, Mitesh, discuss with you the cement pack that seems to be in action. Top mover today on the Nifty, Ultratech Cement 2.6% higher. Grasim is ticking higher now. We have India Cements as the top mover within the F&O space. 4.6% up move can be seen here. After a long time, we are seeing the entire space seems to be in the thick of action. What are you spotting here?
I think technically what is looking promising is Ultratech Cement because the stock took so much of a time to cross its 5-digit mark, that is 10,000 level, now trading at 11,093. So we are of the view that the stock is now heading for 13,000, 14,000 levels, and probably within this cement pack, Shakshi, this is the stock which will surprise on the upside. So yes, looking at Ultratech Cement with a stop of 10,200 for the potential target of 13,000. This probably can be the stock from the cement sector for the month of July expiry.
Okay, 5 times 1 is the level at which that we saw Ultratech, a brilliant number to look at. 11,111 for Ultratech Cement in trade today as the mark on this one. We'll continue to track how it moves forward from here. Let's also discuss L&T in the same breath, and I will ask even Gaurang to give his views, because he's talked about it enough times, and he's actually said a very brilliant line which I remember from the past, Gaurang, about L&T. You called it a generational stock on our channel, and you said that to all our viewers that this is one stock that all the viewers should buy and keep it for the next generation. L&T is finally moving up again, 0.9% higher, 3620. For all those who've been witnessing the rally of L&T, most of the retail investors will say that, okay, it's a stock, but it does not give me momentum, and yet it is also expensive at these current levels. What do I do? What will you tell them?
Stock market is all about patience, Sakshi. You can't expect stocks like L&T, HDFC Bank, Reliance to give you 4-5% move every day. But remember one thing, when these stocks move, they don't look behind. Just for example, HDFC Bank. I remember me, Shail discussing this stock so many times on our show on BTTV. And then finally it did what it had to do. So these are the stocks, and L&T, at least what I've been tracking L&T for, I don't know, maybe last maybe two decades or more. What I have realized, Sakshi, is that it is one of the most investor-friendly stocks. Not only it does give out dividend to your as a stakeholder or a shareholder, but every interval where the bonus is eligible to be given, either 1:2 or for every 2 shares held, they give out 1 bonus. After adjusting to X bonus, within year and a half, the stock price comes back to the bonus level. So you can just imagine the kind of wealth that L&T creates for you. And this is also one of the stocks, actually, which is in my preferred category with respect to private defense. L&T has a decent capacity in place, I believe, down south, and that helps the Indian Navy to a great extent, and even otherwise, even in Indian Coast Guard, Sakshi. So it's a great stock, and I'll again repeat: don't sell it till the time you need money, or just pass it on to the next generation so that they can learn a lesson about what wealth creation is all about in stock markets.
Right. Of course, one of the first stocks, one of the first 10 stocks in my portfolio was L&T, and Sakshi, I haven't sold, and Gaurang is absolutely right. It's going to be handed over. So let's see what the next generation does. But at times there were phases for 10 years when L&T did nothing, the stock in particular, because we were going through this contraction cycle in corporate India as far as creating fresh capacity was concerned. But what L&T did was it gave birth to L&T Technology Services and L&T Information Services, 2 IT stocks. They've created immense wealth, and what is now L&T Mindtree was LTI earlier. So all those generational level of wealth that has come in is from such stocks. One I'd like to mark, Idea Cellular, 2 block deals, 3 crores each, 3.06 and 3.55 crores, 1755. Keep these shares on your radar. There seems to be some activity happening. Reliance is kicking 0.5% higher. Remember, Gaurang's first opening quotes were, I wish Reliance would also participate. So it has started 0.5% higher. And Gaurang, if you are here, how can Cochin Shipyard disappoint us? 2.5%, 3% higher, 8% uptick on Garden Reach, 5% uptick on Mazagon Dow. Now over to you on defense.
So, Shail, I'll again say this, that defense stocks are not 3 months, 1 year story. Defense stocks, whether it is, this is not a buy, sell, hold recommendation. Of course, Cochin Shipyard and BEL are in our universe of coverage. So there is a disclosure on these 2 stocks we have buy call. Other than this, whatever, whichever stock you want to put your finger on, whether it is public sector defense stock or whether it is private sector defense stocks, Uh, these are, 3 year, 5 year growth story. So what I was referring to L&T, I think I would replicate that for defense sector also. That unless and until you are in need of money, don't decide anything which you will depend going forward from here on. And the earlier story was only restricted to the domestic market and how we can secure our borders and how we can reduce our imports and bring down our imports with related to defense. I think this space playing out extremely well. We are not only taking care of our borders, securing our borders with our own indigenous equipments, but we are also exporting them. So that's the big opportunity, Shell. When you start getting into that league, you raise the bar multiple times, and it becomes extremely difficult for anybody to do a catch up with you. So this is what I believe, and this is what I have great confidence in terms of the defense stocks.
Okay, let's get Mitesh into this conversation. The reason why I want to focus on Mazgaon Dock is the intense volume that we see, Sakshi. Of course, this is news driven. It's the 18th Maharatna Navratna that's been nominated by the government of India. At the moment, volume is somewhere like 900 crore rupees, counters 4.5% higher. Yesterday's volume was 1300 crores. So almost how should I say, 70% of volume has been done in the first 20 minutes of trade. Mitesh ji, Mazgaon Dock.
Undoubtedly, Shailji, even if you compare the weekly volumes, the last week's volumes can be done in 2 days. So this is the kind of momentum and craze for the stock. Again, a humble request to all the viewers that you can get into these kind of stocks at any given point of time, no problem. Because at whatever price you sell, you will regret for sure because of the momentum. That's what the chart is indicating. But please maintain a strict stop loss discipline or a trailing stop loss strategy that will help you to get maximum out of a given trade. So yes, with a trailing stop loss strategy, you can please go and continue it. Second thing, Shelji, even if you want to exit, for an example, you're sitting with a very handsome gain, and if you think that yes, you need to sell, we request you sell in parts so that at least your average on the upside will come closer to the price. So I think these are the two most underrated strategy. Whenever any stocks in your portfolio is giving a marathon return, try to sell it in small quantities so that you can at least get a better price at the end of the last phase. The average will be much closer to the CMB.
Listen to that as well. Let's also look at some other buzzers at this point in time. Remember, the concentration within the movers on the Nifty is concentrated to say the IT stocks, the oil and gas stocks, small caps, the infra majors, cement pack, like we've discussed, some of these, and of course large banks that are still doing well, including ICICI Bank. We'll also look at some other movers at this point. Within the PSUs, it's only like BHEL, you have NTPC, you have IOC, you also have Bharat Petroleum. Some of these stocks that are buzzing, but rest of them are also seeing some profits being shaved off them too. Let's look at some interesting fact. Okay, Adani stocks, I can see some move coming in. Adani Ports about 0.7% higher. Adani Enterprises about 0.3% up in trade. ACC is also looking up right now within the space. Mitesh, anything that you spot within the Adani stocks that one should track?
I think Adani Enterprise, Adani Port, that is looking promising, Sakshi, because if you look at the chart pattern since last few days, Adani Port is gaining momentum. So technically, we are waiting for the level of 1480. Hello.
Yes, I can hear you, Mitesh. Yes.
There's too much of a background noise. That's the reason I said okay.
Okay.
Yeah, so Adani Port is above. We are looking for Sakshi 1480. That is a strong resistance levels on an hourly chart. So once that has been taken out, stock will enter into a new trading range and will eye at 1520, 1550. So it's a conditional call. Wait for 1480 on a hourly chart. Once it crosses, then get into the counter. Probably the stock will hit much higher from there.
Okay, got that. Let me also take Gaurang's view on one other sector, and that is the IT space. The Nifty IT is holding up positive. Some of the counters within the mid-cap IT names were also looking up, say, Coforge or a Birla Soft were coming back into action. Large caps, you have TCS that's still holding up. But Gaurang, how are you looking at the entire IT space? In a 10 days or so, we'll be looking at their earnings start off. Just recently, we had Accenture guidance lower on the lower end as well. Is that an indication of somehow muted set of earnings that could come around from the IT space, or should this space be continued look at from a long-term perspective?
I think honestly, Sakshi, aping what Accenture does and photocopying and pasting it onto Indian IT companies' earnings outlook or view, I think it's not being fair to the Indian IT sector. And there has been time when companies like Accenture has delivered or have presented or have given verbatim otherwise, and we have done totally opposite. So, I mean, as a brokerage house, Geojit Financial Services is very optimistic about the IT sector. Last 2 years, in fact, when everybody was underweight and was advising stay away, we maintained our positive outlook. And this time around, we are of the view that this new financial year, FY25, second quarter onwards, the improvement in numbers is going to uh, reinforce the confidence that we have, Sakshi, let me put it this way. And I'm sure then the rest of the world is going to come and tell us that IT looks quite good. So it's better to be in IT space right now when the valuation looks very attractive. Uh, Discretionary spend and budgetary cuts, which were an overhang in the US, is now thing of the past, and I think the situation is going to improve. But we have always believed that US is not the only focus point in terms of business for Indian IT companies. There are a lot of opportunities within the boundaries in India, in Bharat, and added advantage in terms of US plus Europe. So we believe that the sector is likely to perform possibly post second quarter, and likewise you will have re-ratings and price upgrades coming through.
Fair point. Let's look at the FNO space, Sakshi. A lot of buzz around India Cement. This is, of course, the top gainer as far as prices are concerned, now 7.8% higher. Before I get into why this is rising, let's get to Mitesh and check out for how long will it continue to rise. So, Mitesh, to you, a very strong uptick in open interest, 12% higher, and an equally dramatic rise in price, 7.8. What are you trying to do here?
See, if you look at Shailji, the chart pattern of India Cement from the level of 276, it has given a very strong sell-off and made a low at around 194. Again, made a comeback and made a low high of 233. Again, sell-off, and again now we are back to that level. So I am of the view that in India Cement at the current level, it's a fresh breakout about 233, and now the stock will eye at 276. So yeah, definitely at the current level, India Cement is a buy, despite the fact that the stock is up by 7%. I think the stock in FNO ban as far as stock futures are concerned. So probably you will not be able to take position into the futures segment, but in the cash segment, yes, one should go long at the current level for a potential. Hello.
Yes, Mitesh, we can hear you. We'll take a view on India Cement as well. And Sakshi, I think this is a sectoral move. Ultratech is up 2.2%. ACC and Ambuja. Just a background note on this one. ACC and Ambuja have their AGM today. So a lot of news-led activity will be coming in. The reason perhaps why why India Cement is leading the charge is this background chatter in the cement space of impending acquisitions, impending consolidation, and India Cement has always been one of those stocks, one of those companies which could be acquired by a large player. Now, when that happens, we don't know. But that's the background chatter on India Cement. Two more stocks have joined this party. Shriram Finance, like I had pointed out, is the top performing Nifty stock for the month of June. Sakshi, there is a change in digit as far as Shriram is concerned, now above 3000. Mitesh ji, is this something that needs to be chased? Already 30% uptick. What are the rollovers of Shriram Finance futures telling you for the month of July?
So the rollovers are clearly telling us that the long side is being carried over to the next month. So definitely one should go long even at the current level, despite the fact that we have seen a very good rise in the recent past. The reason being is this, that about 2,950, the stock has given a fresh breakout. So now the stock is looking at 3,200 level strategy. So one should go long even at 3025 for a potential target of 3,200 with a stop of 2,950.
Let's again look at some of the other big buzzers that we can spot. Let's look at the autos in the auto ancillary pack, and I'll want your attention right here, Mitesh. Of course, in the recent past, we talked about M&M, we discussed the four-wheelers, the two-wheeler names like Eicher as well. The auto ancillary and especially the EV-focused names are again back on radar, like something like a JBM Auto, Electra, Green Tech, Samvardhan Motherson that we've been discussing. Amara Raja, of course, is on a strong run of its own because of the kind of trigger that we saw recently. Ask Automotive, CIE Automotives, the entire space on the NRB Bearings, Gabriel, the entire space seems to be abuzz with a lot of action. Sundaram Fasteners as well about up in trade today. Anything that looks positive to you within this space?
Very strong chart and a very strong trend, Sakshi, in Samvardhana. I think the stock is looking very promising, a fresh breakout, and this momentum needs to be chased into. So we are of the view that now the stock is eyeing for 230, 240 odd levels. 180 is a very strong support on both daily and weekly chart. So with a stop of 180, one can go long in the stock for 230 to 240 as a target.
Okay, got that. So that's the auto ancillary space that we are keeping an eye out on. Remember, just in 4 days from now, we will also get to see the sales data or the monthly sales updates from all these companies. So they will be again in the thick of action, and we'll see how it really performs. Within the F&O space, one more stock has taken an entry within the top movers, and that is GMR Airports Infra, now up about 3% odd. What do you spot here, Mitesh? Anything that one should be looking at for momentum?
As a disclaimer, we have a long position in this stock from 82 odd levels. So our clients might have a direct or indirect position into this. And our first target at that point of time was 100 rupees. Stock is trading at 98. So we are looking for that target sooner than later. Sakshi, once this stock cross 100, that is a 3-digit mark, there is no stopping. And we are going to see a very sharp and a furious up move in the next couple of weeks or probably a month or so. And our ultimate target is 120 to 130. So yes, definitely the current move is nothing but an extension of a trend, and one should chase this momentum. The stock is not here to stop. Probably you will see a high volatility because the stock is a high beta, but one should get into this counter even at the current level with a deeper stop loss of 92 for the potential target of 120, 130 next 1 month.
Ladies and gentlemen, it's a sector-wide rally in cement. We track about 44 cement companies in business today, and Sakshi, at least 35 are in the green. The ones that are in the red are, nothing to be worried about, unless you consider Sangvi Industries. But that was, this block that has just recently happened. Okay. India Cement leading the charge, 9% higher now. Almost you'll see a 10 percentage point uptick, 251. And by the way, India Cement has moved from its 200-day DMA. So that's a very, very big move that's happening. You have Mangalam Cement, which is now 5% higher, 902. Heidelberg Cement, 3% higher, 222. You have Prism Johnson, 3% higher at 170. We are not looking at Ultratech or Ramco or Shree Cement because they are in the F&O pack. I'm just talking about cash. Look at Kesharam Industries, 2.3% higher, 199. Deccan Cement is 3% higher, 692. Nuvoco, Birla Corp, Udaipur Cement, as also Star Cement and Kakatia Cement, all up 1.5 to 2.5% each. So sector-wide rally, and if I may add, Sakshi, what's also happening is that the monsoon is not there to sort of dampen cement sales. So maybe the month of June will show better cement numbers than what is generally expected, because the monsoon sort of dampens cement offtake, at least in markets of Maharashtra where the rains are very severe. Let's get Mitesh ji to comment on Birla Corporation. This is one of the finest mid-cap counters within the cement space. 1565, 2 percentage points higher. Mitesh ji, what are the charts of Birla Corporation talking to you?
Okay, so as far as Birla Corp is concerned, again on the weekly chart, stock has given a steep sell-off from 1800 odd levels, now trading at around 1500 odd levels. So we are of the view that the stock is facing an intermediate resistance of 1625, which is the high of earlier week. For the week ended 21st of June 2024, the stock has made a high of 1625.95. So, Shailji, looking for this the stock to close above 1625. Once it crosses above that level, probably the stock will enter into a new trading range and will definitely test higher levels. In that case, the target could be 1800, 1900. So watch out for 1625. Once it give a close above on the daily chart above 1625 for a single day on the closing basis, one should go long into this counter.
Okay, let me just mark the open interest addition in cement counters. Remember another point, that this is also a sectoral rotation of money which is happening into a beaten down sector. Apart from Ambuja and apart from Ultratech, there are very few cement stocks that have shown gumption and strength over the last 5-6 months. So this is of course a sectoral trend that is happening. I just mentioned that India Cement, perhaps the second highest beta counter in the FNO, is at 200 DMA. So you can well imagine the under ownership and the undervaluation in this sector. So all FNO stocks in cement, Sakshi, have shown an increase in open interest. Remember, we discussed India Cement with an open interest of 12% just 5-7 minutes ago. That open interest is now 21% higher. So this is going to be a couple of days kind of a move. Ultratech Cement 2% higher. You had mentioned a change in digit. Now the open interest is 7% higher. And Ambuja and ACC, keep an eye out on both these stocks. These are consolidators in the market, and they have their AGM today. Sakshi.
Absolutely. So this entire space seems to be in the thickest of action, and we will continue to track more cement names and the way they continue to buzz in trade today. Let's again go across to Mitesh to really understand what else looks positive to him. I discussed with you GMR Airports Infra, but in the last few days, Mitesh, I've also been noticing how the entire tourism space seems to be in the thick of action. So ITDC, for example, has been on a continuous momentum. Tourism Finance Corporation did show some momentum. Even today, there are some of the hotel stocks that are actually buzzing in trade. So like a Samhi, Royal Orchid, that's moving up in trade. BLS International Services is up and about as well. Some of the banquet names. Anything that looks positive to you within this entire sector that you would be looking at, especially with the budget now coming in, and there are hopes that the government is now looking at promoting domestic tourism?
See, Sakshi, post COVID, I mean, this sector has emerged as one of the biggest gainer. And now, even if you look at some of the mutual funds or a PMS or an AIF, they are also now considering this segment very seriously. And post the inauguration of Ayodhya Ram Mandir, Ram Mandir at Ayodhya, I think there is a separate segment called the spiritual tourism, which is also now gaining a momentum. So the one simple and a very sound theme within this basket is first airlines and second is hotel, because to go to any destination, you need to stay in the hotel, you need to travel. So three stocks are looking promising within this basket. First is the Indian hotel, second is Interglobe Aviation, Indigo, and third is IRCTC. Because either you travel by a rail or you travel by an air to a long distance, and you will stay in the hotel. So I think these three themes are quite interesting at the current level. And we are of the view that at least for the next 2 years, any dip should be bought into these stocks. These stocks should and must not be considered for the trading purposes, but it should be a part of your portfolio as a short-term picks, and you can rotate these stocks at a regular interval. Probably you will get a much higher returns. So I think technically these three stocks are looking very promising at the current level within this entire tourism theme.
Okay, got that. So we'll continue to keep an eye out on this space as well. Let's see what else is buzzing in trade. Let's look at the small caps basket within the broader markets. I think this is showing some traction, and Raymond has already pointed out by Shail earlier. We also have Amber Enterprises that's up, Electra Green Tech, Wellspun Living. We have PVR Inox. That seems to be an interesting one to discuss. PNB Housing Finance, Triveni Turbine, Castrol, Naveen Fluorine, Data Patterns, a whole host of different sectors really contributing within the small cap space. But PVR Inox, I wanted to discuss with you. There was a brokerage report a few days ago looking at almost a 35-40% upside on PVR Inox. There has been a long drawn difficult time for the multiplex chains, and of course they're finding their feet now. Some earnings improving, things looking up within the Bollywood as well with the lineup. But how do the charts of PVR Inox really tell you, and what do they share?
I think Sakshi, even not after COVID, after COVID, even in the year 2022, if I look at the chart right now, for the ended 30th of September 2022, stock has made a high of 2,214 rupees 85 paisa. Since then, the stock has not crossed that level. Even on the quarterly chart, the stock is forming lower top, lower bottom formation. Why probably everyone is bullish on the counter is because of the fact that the stock has formed a triple bottom technically. The first bottom was for the quarter ended 31st of December 2021 at 1224, 12,024. For the quarter ended 31st March 2024, 1,256. And recently in the current quarter, the stock has made a low of 1,200 rupees, 1,204. So technically, Sakshi, the stock has formed a triple bottom formation. And generally after triple bottom formation, what we are advocating in the technical chart is that the stock has finally formed its bottom and now slowly and gradually going up. So because of these kind of a setup technically, now the chart is looking pretty interesting. At 1,200 rupees of a stop loss, one can go long for the potential target of 1,875, which may looks pretty good, which may looks pretty long from the current level, but sooner than later the stock will get to those levels. And second thing why the stock is looking attractive is that looking at the recent bottom at 1,200, trading at 1,428, the risk reward ratio, Sakshi, is in the favor. So with these two logics, one should go long in the stock at the current level.
There's absolutely no stopping cement. Newer and newer stocks are coming on the horizon. You have Birla Corp that we had just recently discussed, 3% higher, 1528. The rally is getting deeper and stronger within the cement counters. There were now two stocks up 10% each. India Cement, of course, we've discussed, and Burnpur Cement. This is just a 7 rupee stock, so don't pay much attention to it. But I'm just talking about the strength now that is coming. A couple of stocks have increased by 1 percentage point over the last 10 odd minutes. Among them, Prism Johnson, 5.61% up. You have Nuvoco. This is erstwhile Nirma, 4.8% higher, 366. If I am not mistaken, this is still below its IPO price. Swarashtra Cement, 4.2% higher, 138. And Sakshi, a couple of stocks that we used to track thanks to Gaurang, JK Lakshmi Cement, that's doing pretty well, up to 2.5%. There is, I think, a CLSA report on Dalmia Bharat downgrading the stock. That's also in the green, 1.6% higher, 1845. And of course, the big ones, JK Cement, which is at 44.46, showing a decent block deal. there is Grasim that has moved, and of course Ultratech. But the biggest boy of them all, Sakshi, Reliance Industries. Miteshji, coming to you, bouncing from 21-day EMA, what is Reliance charts telling you?
Shailji, it's a coincidence. The moment you spoke and we have a breakout and we just now took the trade and recommended our clients at 2941. That is the level which was a breakout level. So the stock has just now made a high at 2942.30 and we took a position as a long position in the stock. So yes, from the current level, one should eye at around 2980 and 3000 level in the next 1 or 2 days. So probably today and tomorrow will be where the big boys Reliance will participate and help the index to sustain at the higher level. So definitely at the current level, it's a buy.
Okay, that's the move coming in at Reliance. Sakshi is telling me to point out Radico Khaitan. They've launched a new gin, which is the gold edition of Jaisalmer Craft. Obviously, she doesn't have any, but this is news driven. So let me just mark the stock for you. This is one of those real outperformers that we've seen over a long time, and of course at 1812 now in the red, but this is news driven. A new gin that has been launched. Sakshi, it will interest you to know that India, especially in the age group of people above 25 and between 35, they are no longer whiskey fans. They only drink gin. And in a lot of parties that I have been to, there is a separate gin counter, which essentially means this is the new wave of buying that will happen in gin. And a lot of other liquor makers apart from Radico are also launching newer, better, and I may dare say very expensive versions of gin in India. Sakshi.
Absolutely, and this is going to be an interesting one to see. Let's ask Mitesh. I don't know if Mitesh is a fan of the products of these liquor makers or of the stocks right here. So Mitesh can probably help us understand, does he like the charts better, or is the product looking better?
Sakshi, no non-veg, no drink, never in life. So not a part of the product at all. But yes, the stock is looking, the entire space is looking promising, I think. And unfortunately, the disappointing part is that even if you look at the United Breweries or United Spirit for that matter, the stock are not picking up that kind of a strength. I mean, after a few moves up, again, the stock is coming back to the original level. So I think we are also disappointed because we are long in this space technically since last 9 or 12 months, but unfortunately our targets are also not met on the upside. So probably it might take still a good amount of time for the stocks to move up. But yes, the space is looking attractive and one should go long at the current level.
Okay, 45 minutes of trade, ladies and gentlemen, 10 a.m. on the clock. The Nifty is pausing a bit on T-1. Remember, tomorrow is its monthly expiry for the June month, and it's been a fantastic rise, 5.4% higher on Nifty alone. The Bank Nifty is undergoing its monthly expiry today. The counter flat, 191 points down, 52,470. Absolutely no complaints there. The Nifty Bank in the last June expiry has added 8.5%. Blowouts happening on ICICI Bank, HDFC Bank, Axis Bank in particular, and this is something to be looked at. Mitesh ji, before we let you go, one stock that you would highlight for our viewers and traders and investors for today on technical charts.
See, undoubtedly today on the technical charts, what is looking absolutely promising is nothing but if you look at the stock which we have already discussed, I think we have not discussed, that is Polycab. 7313 is the level at which the Polycab is trading right now. I think both for the day and for at least a week, the stock is looking very promising with a stop of 72501 can go long in the Polycab. for the potential intraday target of 7,400 today. And if we hold the stock for 1 or 2 days, probably we will eye at a level of 7,400, 7,500. So Polycab is one stock technically which I recommend at the current level.
Fair point. That is what is happening on Polycab. And at the same time, Miteshji, thank you so much for those lovely discussions that we've had today, especially on private sector banks and on your very consistent view on how to tackle technical charts, especially the very underrated, underused, but extremely effective stop loss strategy. Thank you so much.
Thank you.
Okay, ladies and gentlemen, now is the time to pause a bit and think long term. With us, joining us shortly would be Mr. Dinshaw Irani. He's from Helios Mutual Fund and a man with immense stock picking talent and a man who always smiles no matter how the markets have been and how markets have treated him. Over time, they've treated him very well. Dinshaw, such a pleasure always to host you. It's rare to find people smiling in different facets of life and different facets of market. But we are truly blessed to have you so often and in such a wonderful phase that the market is going through. Good morning and a very warm welcome to you.
Thank you, Shindarji, and thank you for the lovely introduction. And a very good morning to you and your team and your viewers.
Okay. The only person who laughs more than Dinshaw in the market is his partner in investing, which is Mr. Samir Arora. And you know, Dinshaw, I've always sort of thought about this, that when both of you meet, do you just keep on laughing or do you also discuss stocks?
Oh, no, we're very serious when we meet. It's only for the world that we keep laughing, so that way. But yeah, he's a very good gentleman to be with, a very jovial fellow, and always a pleasure to be around him. And obviously, he's like a, that sagar of knowledge, a sea of knowledge. So that way.
Okay, ladies and gentlemen, the flagship product of Helios Mutual Fund is Helios FlexiCap Fund. You'll see a lot of details coming on our graphics as we discuss not only this fund but the broader markets as well. So, Dinshaw, now we'll keep on laughing during the show, but let's discuss on how markets are going. Your flagship fund is performing superbly. Launched in November with a net asset value of 10 rupees, it's now at 1360. So a 36% return in less than 8 months is nothing short of phenomenal, and this points to phenomenal stock picking on your behalf as well as on the part of Mr. Samir Arora. So congratulations for that. But what now? यहाँ से कहाँ जा रहे हैं हम लोग बाजार में? Nifty headed for 24,000 and of course a very strong record high on Bank Nifty.
So Sharmaji, the fact is that the world, I think, has re-rated India, and for that re-rating to continue, and why I'm saying that is because if you look at the last 10-year averages, the 1-year forward PE has been 17.5, 18 odd times, but today we are at 20 plus kind of PEs, forward PEs. But I think that re-rating is on the back of the fact that India is looking far better than any other option available in the world, given that our GDP growth rate is going to be the fastest among the large economies in the world in the next 4-5 years, for the next 4-5 years. And obviously the fact that our corporates have cleaned up their act, debt equities are at all-time lows, obviously our return ratios because of those low debt equities are at all-time highs. So it's obvious that that is the reason why we've been re-rated. But to continue that re-rating, we need to be on this path. We need to be on this path of growth, on this path of cleaning up your balance sheets, keeping your act very simple. So I think that is what is needed. And probably in this budget, I don't see any changes from what were given out in the past budget, where growth is the central focus. Obviously, there'll be some amount of tinkering with the rural economy not picking up, so you can see some kind of benefits going out there. But I don't think it'll take away too much from the overall path that we are on. So we don't see much change in the markets. Obviously, budget will be a big trigger for the markets to go forward, and following that, probably in the end of the year, you'll see some interest rates getting reduced in the US, and that will be a major trigger for the world markets also as such. So.
Okay, then show the top holdings of Helios FlexiCap Fund are there in graphics format with us, and one reason for this lovely smile is of course the two top stock picks are HDFC Bank and ICICI Bank. Absolute blowouts happening there. What do you make of this sectoral rotation of private sector banks which are now on the top of radar? For our viewers, ladies and gentlemen, Helios has been one of the biggest and one of the best votaries of private sector banks over the last 25 years or so, and they've made phenomenal money for their investors both in Singapore as well as locally in HDFC Bank. It's bang on focus now, Dinshaw. What from now onwards?
So, Shrinder, the fact is that the financial sector, forget about the private sector banks or public sector banks and stuff like that, the financial sector, lenders, non-lenders, both put together, is actually a backbone of an economy. In a growing economy, they do phenomenally well. In fact, you've seen that prior to COVID, this sector was out and out total outperformer vis-a-vis any other index that you would compare it to. And I'm talking about 20 years prior to COVID, right? During COVID, this sector took a bit of a breather, I would say, but mainly because of two large weightages in that index, that breather came about. But if you look at the other component, basically I'm referring to HDFC Bank in Kotak, which didn't perform too well in the last couple of years as such. And that's why the index looked as if it was underperforming. But if you look at the individual components, they have done fairly well with it. So it's not that the story became any different during COVID time. It was just a couple of components which didn't work out. Going forward again, we are so convinced on this sector that, in fact, we brought out and in fact, when we were starting off a mutual fund, we didn't even think that we'll come out with a sector-specific fund. But we got so convinced on the sector sometime in March itself that we applied to the regulator for a sector-specific, which was financial services fund, because we were very clear that this is the one which is going to lead the rally going forward for the country per se. And we launched our fund and we shut it on 14th of this month. And in fact, yesterday we opened it up for fresh subscriptions. So I could have timed it better. I mean, I don't think we could have timed it better in that manner. So it's hopefully, yes. I mean, fund should do well going forward, and that's the conviction which came through, right? Because we were looking at the financial services, and as I said, the non-lenders are going to be a bigger part. The wealth managers, the exchanges, the brokers, these yes. are going to be a big play going forward.
Okay, I look forward to the first portfolio of this new fund that you'll declare in a month of now, but absolutely correct. It's the financialization of India's assets that's happening, and one of the real broader and long-term tailwinds which is also driving this bull market. Then sure, let's dig deeper into Helios FlexiCap Fund and look at the fact that in the first 10-12 stocks, there are no IT companies. KPIT is your top pick from the mid-cap software sector. But one of the biggest bulls in the market in the erstwhile 1990s was Mr. Arora on the IT space. What don't you like here? And why do you like KPIT Technologies?
Okay, so Shailendra, first let me tell you, we turned negative on IT way back in December of 21. In fact, that's when we started chopping off IT, and the reason was obviously that inflation was going to rear its head. In fact, if you remember, December 21 was one of the presentations Jerome Powell made to the Senate, where he said that inflation is going to be sticky and not transitionary. And that's when we realized that inflation is going to rear its head. And it's obvious that when such things happen, discretionary spends just vanish in US corporates. And India, for Indian IT, US is a big market for them as such. So, and that's where real margins are made, real money is made there. This is what gives the profits. Otherwise, it's just bodies being offered on an hourly basis. The model for IT, that is. So that's when we started chopping off, and till today, in fact, we became, I think, zero in IT in July of 22 or August of 22 or something at that time. And we've never added IT to our portfolio after that because we're still not convinced of the story as such. But as I say earlier also, that things are now much more reasonably priced than what they were probably. So, but the growth rates are still not there. Okay, so maybe they're expensive if you look at the PEG basis as such. So that's why we only short in the portfolio, in our offshore portfolio, which is a long short portfolio, but we'll definitely not be long as of now in that stock. Coming to KPIT specifically, I don't think it's an IT play at all. It's more of a product play. He's the only Indian company which is into automation for automobiles. I mean, self-driven cars and stuff like that. And that's why he's been picked up by the big auto companies per se, and that's where we convinced about this, and I think this is the future. So that's why we got that particular stock in our portfolio, not because it's our IT services company.
Fair point. This is, of course, a very good exposition on how IT is likely to behave. I'm talking about large cap IT in the coming 6 months or so. A lot of baggage on how artificial intelligence will change the dynamics of the sector, and as you can make out, I think for the first time in 25 years the top 4 IT majors have actually shed staff on a net basis rather than adding thousands of software engineers as they used to do every quarter, every month. Dinshaw, the other stock that catches my attention is Zomato, and just a couple of weeks ago when we saw this sharp downtick, after that we had the pleasure of hosting Mr. Arora. He mentioned that Helios took advantage of that downtick and added to Zomato. Now you've been an early holder into Zomato as far as the faith in this internet space is concerned. Does it get stronger? The reason why I mention this is that there is a string of brokerage reports that has come up over the last 2 odd months on Zomato, and they are extremely positive. Could you explain the investment thesis from now on as far as Zomato is concerned?
So, Shavinder, the fact is, Zomato is not a technology company; it's a platform company. Actually, it's not a food delivery, but it's a platform company which is offering you food delivery, right? So, what do you look for in a platform company? One, that does it provide convenience? Yes, it does. Does it is it a mass convenience that it's providing? Yes, it is. Because India is now a base of 65 crore young population, which is less than 25, and they love to eat outside, they love to order from outside. So it's a huge potential which is waiting to be tapped. Is it encashable? Yes, it is. And you've seen that in the case of Zomato. Progressively, as the company has matured, from losses it's turned to profits, and obviously it's now charging a premium for its services and stuff like that. And the fourth one, which the answer has to be no, is that is it easily replicable? No, it is not easily replicable. We've seen that not only in India, but also globally. If you look at global markets, say the US, which is the most developed markets, there are only 2 players out there. DoorDash, which is the number 1 player, which has got almost 70% market share out there. Then if you look at China, which is more of a replica of what India can achieve, there's only 2 players again, Mituan, and that again, guys, he's got some 70% market share once again. So it's obvious that globally there are only 2 players. In fact, if you even go to Singapore and other markets, there are only 1 or 2 players mainly, which are there in those markets as such. So it's obvious that's a 2-player market globally. So it's India also has been the same. You've seen others coming in and finally getting sold off or merged with these 2 players. And frankly, I mean, the number 1 player which is the market leader. In this case, it has been Zomato, always takes more and more market share, and you've seen that happening here too. So we are very bullish on this model, given that the potential is huge. Even right now, the base is very small as compared to what it can be. Only 2 crore regular users on Zomato platform, but the base can be as high as 10 to start with, right? So it's obvious that it's looking much more exciting given that base also. So we'll continue to hold it, given the potential that it offers, and probably take a call on it whenever we see the potential getting exhausted, which may not be so. Let me add that.
Fair point. Zomato. Okay. Zomato is ranked 5th in terms of the placement within the top 10 as far as Helios Flexi Cap Fund is concerned, and about 3% of the 1376 crore AUM of Helios Flexi Cap is into Zomato. The other miss out, Dinshaw, in the portfolio are railway and defense counters. In fact, railway finds no mention. The 18th stock is IRCTC in the Helios portfolio, and defense is missing in top 10. BEL is your pick, ranked on I think 11th position. Is this something that you missed and you regret, or is this something you are staying away on purpose? What could be the reason to miss out this fantastic bull market which we see unfolding on defense?
So basically the point is, by the way, railways, we looked at those stocks and we found them very expensive at the very beginning itself. So we didn't even look at railways after that. IRCTC that you mentioned is mainly a call on tourism. In fact, tourism is a big sector for us. Today we got quite a few hotel companies. In fact, one of the IPOs, the only one probably where we applied for an anchor, was in the hotel space. So that's why we are very bullish on tourism, and that's why RCTC is there in the portfolio rather than being a railway stock. So that one. Secondly, on the defense front, we looked at all the stocks, and what we realized was that most of these names were very service specific, like catering to either the Air Force or to the Navy and stuff like that. Right? So we didn't want to be stuck in such a space, given that budget allocation can be very frivolous. So it's obvious that we wanted to be in a space which is agnostic to the services, and that's why that name BL, which came up to us. It was an expensive stock then also when we bought it for our flexi cap fund, but it's done fairly well from there on also, because it's a service agnostic play. It can offer to all the services within the army, plus it can cater to even consumption space because it's electronics. And obviously if you're looking at India, and that's what our call has been on defense, there's one more stock which is in the defense space, which is a private limited company. Not private limited, sorry, it's not a public company, it's a private company, which is in our portfolio, listed private company, that is. And so the call on our call on defense was that it's not only about indigenization of defense imports into the country, but at some point will become a base for outsourcing to the world as such. The world has been spending a lot on defense, thanks to what started off with Russia, Ukraine, and China, Taiwan, and obviously Israel and Palestine, and whatever is happening. So the world is spending a lot on defense, and as a result, the sourcing can only be through a country which is fairly a friendly country, and India is one of them. So it's obvious that we'll become a outsourcing base, and that's why the reason why we picked up these two specific stocks in defense. I don't think we have any FOMO right now of missing out on stocks.
Yeah, that's a sensible thing to say. Fund managers have to keep valuations in mind, and it's okay to miss out a few rather than have something staring in your portfolio which goes down month on month because you bought momentum instead of value. There's a fair point. Well taken, sir. The other question that comes while watching your portfolio is the presence of HPCL. This is also amongst the top 2 stocks that top 10 stocks that are there in your portfolio, and a fairly decent holding here. Any logic that you would explain to our viewers why you like HPCL?
So basically, the point, I mean, why we took a call on HPCL was that one, it was obvious that when they're talking about value unlocking, that is what you want to look at. And then they were talking about, I mean, they're doing it actually. They're demerging, I mean, proposing to rather demerge their lubricants business. Now, when we bought that stock, the lubricant business alone, if you were to look at the peer valuations and give a discount of public sector, they were quoting at probably the same market cap as the listed space, so listed stock. So it was obvious that there's a lot of value in this demerger, and that's why we bought the stock. It's done phenomenally well after that. So that is what kept us holding on. And the fact was that the only concern that we had at that point in time was, will the impending state elections lead the political powers to be to pander up to the masses and cut off fuel prices and try to ride on inflation? Didn't happen at all. And that's why we realized that, okay, this is the way the promoter mentality of going to change, because the promoter now realizes that it's more of wealth creation rather than just purely using it as a tool that helps in their wealth creation also. So that's why we kept on holding on to HPCL. We also have a BPCL, a small position there also.
Yes, absolutely. Okay, so HPBP is of course for old time players in the market who used to have a deep love for these two twins, but again you've been rewarded 1:1 and 1:2 as a stock split in June only for both HP and BP. I'm sure in all parties and 3 out of 4 phone calls that come to you on a daily basis, people must be asking, yaar ab kya kare, we missed this rally, we didn't listen to you 6 months ago and invested money, लेकिन अब मेरे को लग रहा है कि अब बहुत तेजी है, अब बताओ क्या करें, and I want to put in a lump sum. Now what are you advising those people who want to come into this market now and they have this huge regret कि 2 साल 3 साल से पैसे इन्वेस्ट कर रहे थे, या तो निकाल लिए या किए ही नहीं इन्वेस्ट. So what's the way forward?
So here it is, Shrinder, the fact is that India is going to do it, right? I mean, our feel is that your GDP growth is going to be, I mean, the nominal GDP growth is going to be 10.5 to 11%. If that continues, which has done in the past, then if you look at the last 25 years, the return has been around 13.5, 14% in the index per se, right? And I don't see that changing much. In fact, if anything, if India is looking more exciting, it'll be far better, maybe slightly more better, not far better, sorry, slightly more better than that. But the fact is that even if you've lost the recent rally, if you invest even today in a lump sum, on an overall longer scheme of things, it'll be just one small blip. Even if there's a correction in the market after you've invested, we have one small blip, and after that you'll see your portfolio growing again. So I would say that be a bit more flamboyant, come into the market. So if you're feeling scared, do a SIP and continue with your SIPs. STP really doesn't make sense. A SIP makes more sense than a STP as such. But yeah, so leave it to the investors.
Okay, that's what is the advice for people who've sort of missed the rally. And one more thing, Dinshaw, before we call it a day. Every day you have this huge number of blocks being offered mainly by promoters to either increase liquidity in their own share or just take advantage of this fantastic bull run that is happening, to the extent of about 65,000 crores of blocks have happened over the last 2 months or so. Which side of the battle do you stand on? Is this something that is going to derail the bull run, or is this something that is going to make this bull run even more liquid and even more stronger?
So I actually, Shrinderji, I actually stick to that side which says that the 65,000 crores of liquidity that you saw in the market got absorbed without the market feeling the pain of it, right? So the fact is that there's enough and more which is coming through. In fact, and there's enough liquidity even to absorb. Otherwise, if there was these offers hadn't come, this money would have gone to the stock equity market, the listed space, and you may have seen the index becoming more expensive. So let's keep it at a very reasonable level. And this liquidity offers that the fact that it's the valuation remain reasonable over a stretched period of time. So I'm sticking to that part of the market as such.
Okay. Again, Dinshaw, what a pleasure to host you. And let's wait for the Flexi Cap Fund to sort of put up its next monthly review, and then we'll dig deeper into your holdings. And of course, I look forward to the next mutual fund review of the financial services fund that you've launched. I'm sure there'll be very, very exciting stocks to talk about. As always, keep smiling. You light up not only the screen but also the bank accounts of investors who've put faith in Helios Flexi Cap Fund. Again, I repeat, a 35% return in a span of 6 months is phenomenal performance. All the good luck to you and all the best, Dinshaw.
Thank you, Shailendra. It's always a pleasure to be on your show.
With that, ladies and gentlemen, we'll draw to a close the first 2 hours of coverage on live markets. Of course, news, updates, and all that is happening in the world of finance keeps on ticking on Business Today Television. Stay glued, and we'll be back sharp at 2 p.m. for the final round of the day. Thank you so much.